Hi there, welcome to kneppyinvests. Resonance Health. This is, was quite a small company when I started following Resonance in 2013. So yes, I've been following this company for 8 years. When I first started following them, they were fairly small, something like a market cap of maybe $5 or $6 million. However, they have grown through the last 8 years, particularly towards the end of 2018, when they released a piece of news about FDA clearance of one of their products. And the market took notice of that. And we saw a bit of a re-rating of the share price at that point in time. Fortunately, I was not a shareholder. I have been a shareholder of Resonance. And at that particular point in time, I was not. Impatience did me wrong with this company, because if I held on from when I bought something like at 1 or 1.5 cents. And if I did hold on, the value of my holdings in this company would be at least a 10-bagger, maybe more. So Resonant Health, they develop and commercialize non-invasive medical imaging software and services. Two of the products I'll talk about in this video are Very Smart, which is an automated system for measuring liver iron concentration, and the other one is HepaFat AI, which is an automated system for measuring a patient's volumetric liver fat fraction using MRI images. Most of that sort of thing goes over my head. This company is growing their revenues very slowly. In fact, compound quarterly growth rate of their receipts is between about 1 and 2% over the past 8 years. So even though they are growing slowly, they are profitable and generating cash in operations. And all the research and development they're doing does give me some sense of feeling that this company could be significantly larger in about 10 years. Before we talk about their March Appendix 4C, just a few facts in regards to this company. Ticker code for Resonance Health is RHT. Market cap at the end of closing, about the 28th of June, was $72 million. Revenue is quite small, only $3.8 million. Now, in saying that, they were operational cash flow in the last 12 months of $2 million. There's quite a good margins with this business. So you can see that with the Appendix 4C, cash receipts was less than $1 million, yet they were operational cash flow positive, and they're still doing quite a bit of research and development. If we can, or if Resonance can see that revenue grow or that cash receipts grow at a quicker clip, this company will become highly profitable, and I have no doubt the market cap will just explode from that point on. It reminds me of Pro Medicus. I'm not saying Resonance will become Pro Medicus. It reminds me of Pro Medicus. Their margins were really good, and as soon as their revenue started to grow, their operating cash flow, free cash flow, and profitability just grew exponentially along with that growth in revenue. Price to operating cash flow ratio 36. Use that with a grain of salt, because that operating cash flow could grow quite considerably over the next few years. If you do like what you hear in this video, they released their Appendix 4C on the 29th of April for the March quarter. The June quarter, they should release that Appendix 4C towards the later period of July. I'll be looking out for that with some bit of anticipation. Now let's have a look at their Appendix 4C for the March quarter that they released on 29th of April. I've already given a little bit away here. Receipts from customers for Resonance Health was only $985,000, so not even $1 million. They are struggling to get above that $1 million of receipts in a consistent way. Now, even though they only had receipts of less than $1 million, they were operational cash flow positive by $175,000 for the quarter. And over the past 9 months, that is $1 million, although that has been held by government grants and tax incentives. And because they are operational cash flow positive, they are growing cash quite consistently. At the beginning of the quarter, they had $8.1 million of cash and finished the quarter with $9.2 million. And with a market cap of $75 million, that means the enterprise value is about $65 billion. So this does mean the company is looking a little bit more attractive if you look at the valuation in enterprise value terms instead of market cap terms. Looking at the cash receipts for one quarter in isolation really doesn't tell you anything. You need to know the trend through time, and I do have a lot of data here for Resonance, because I have been following this company since 2013. So I do have quarterly receipts going back to the March quarter of that year. So we do have 8 years of receipts history. So that's 32 quarters. And we do see a general upwards trend, a very slow upwards trend. In fact, I did calculate the compound quarterly growth rate, and I'm finding it's between about 1 and 2%. That's still growth. It's not going backwards. They are having a hard time getting consistently above that $1 million. I think that's sort of the next really significant barrier they have to pull through. We haven't seen much growth over the past 2 years with the receipts. So it's been between about $800,000 and $1 million. It's not getting above it. It's not going below it. You can see it's not quite as lumpy as it used to be going back 4 or 5 years ago. It's much more consistent now. And there is some hope that we will see the receipts grow over the next few years, simply because we do have, or some of their products have been FDA cleared or FDA approved for them to sell. Now, let's have a look at their charts. I'm going to go back in time, first of all, and look at 2013, when I became interested in this company. Back in 2013, I was looking for companies who were releasing some interesting news announcements. And just before the 20th of December 2013, we did see the share price of Resonance just go in this little bit of a bull run in November. In fact, the share price went from 1.5 cents to 5.5 cents on no news. The company did receive a price query from the ASX. Why was this happening? We also saw a bit of volume increasing with that. That is, I won't say insider trading, but that could have been some loose lips. Someone had heard that the company might receive some good news in the future. And boy, did it receive some good news. FDA did clear the HEPA-FAT scan, and the share price rose 183% on the back of that announcement. Share price went from just above 2.5 cents to a close of trading on that day of around 8.1 cents. Now, in saying all this, it does look quite exciting. This could have been a breakout in the share price. It was not. And in 2 slides, I'll show you a period, the weekly charts from between 2013 and 20. But now I'm just going to go back or forward in time from here, 5 years almost to the day, to 2018. And we'll actually look at the breakout announcement for Resonance Health. As I mentioned, almost 5 years to the day, just a little bit behind that. On the 3rd of December 2018, FDA cleared the use of their product called Very Smart. Share price rose 100% on that day. You can see, just like 2013, just before the FDA granted the approval of Very Smart, there was a bit of a kick up in the share price. Again, maybe some loose lips. The very fact that this happened twice, 5 years apart, is actually not... Actually, I won't say anything bad. I'll just say this could be a sign in the future that if you see this little kick up in the share price of Resonance Health, just one day massive increase in volume, that could be a sign that someone who is privy to this information knows it's going to be released in the future and is just buying. This is, I don't want to say it is a sign of insider trading because I don't want to go that far, but it does look a little bit sus. This was the breakout in Resonance Health share price. The share price rose on this day from 2.5 cents to a close of about 5.5 cents. And share price has been going up ever since then. The 2013 potential breakout was not. And you'll see that in the next chart when I look at the weekly chart from 2013 and 2020. So let's have a look at that right now. This is the weekly chart from 2013-20. You can see back in 2013 that potential breakout in Resonance Health share price when the FDA cleared HEPA-FAT scan was a failed breakout because the share price then drifted down over about a 2-3 year period before it consolidated for another 2 or 3 years. In fact, the share price went from a high of over 10 cents to around about 1.5 cents at a low in 2016. That long period of consolidation, that is, there was a couple of times there where the share price looked like it was going to break out and then it pulled back. It wasn't until the 3rd of December 2018, when the FDA cleared the Very Smart product, that's when we saw the real breakout in the share price. I'm not sure what the difference between the HepaFat scan and the Very Smart. I can't get any information on the HepaFat scan, so obviously for some reason the market wasn't as interested in or didn't think this was a game changer for Resonance Health, the HepaFat scan approval, compared to the Very Smart clearance. That seems like the Very Smart clearance, that seemed like that was a game changer for this company. And to finish up this video, I'm just going to look at the last year or so. And the reason I showed you 2013 and 18 and those two, one potential breakout that failed and then the breakout in 2018 on the FDA clearance, is because in the past year, actually in the past about 6 or 7 months, we have seen two clearances of the HepaFat AI from the FDA and the TGA. We did see the share price increase 81% on the 9th of December when the FDA did clear the HepaFat AI. That potential breakout in the share price failed, just like 2013. And then again on the 18th of February 2021, when the TGA approved HepaFat AI, share price initially rose 50% on open, and so much selling came into trading on that day. And by the close of trading, share price was only up 5%. The main reason why that breakout failed was because of the breakout that failed only 2 months previous to that. So there would have been a lot of buyers who had bought in on that potential breakout on the 9th of December, bought in around 20 to 25 cents or so, saw the share price rise to that level on the 18th of February, because after they bought in on the 9th of December, the share price fell back a long way from that mid-20 level to around the mid-teens. And they saw the chance to get out of this dog stock, even though it's not really a dog stock. They think it is because the share price has fallen, saw the opportunity. There wasn't enough buyers to meet all the sellers who wanted now to sell out to break even from when they bought in 2 months previous. So that's why that potential breakout failed. And share price has been drifting ever lower since then. When they released their Appendix 4C in April the 29th or wherever it was, share price was flat since then. That was, share price was about 20 cents on that day. And we have seen the share price just drifting lower. Doesn't look that healthy right now as I'm speaking. Share price is around 16 cents. So even if you are interested in this company, I'll just probably wait until you do get a nice little, some good news from the company. Potentially that good news will be the June quarter Appendix 4C. If you do see a bit of a lift in their cash receipts, if you do see the company a little bit more operational cash flow positive, that could be a good time to enter into this company. But just wait, be patient. You don't have to rush into this company. If you do like what you hear in this video, do your own research. Look at who the CEO is, which is Alison Laws. Look at who the major investors are, that sort of thing. Do your own research. And if you do like their products, they do have a lot of research and development. I would highly recommend going just to one of their presentations, go to their website, look at all the research and development they're doing, try to understand it. I have a hard time understanding most of the stuff, but try to understand it and then come to your own conclusion and potentially buy when you do see a breakout in the share price in the future. That's all I have for this March Quarter Appendix 4C for Resonance Health. If you have any questions about this company or any other company on the ASX, leave a question or comment in the comment section, or answer anything you have to say in due time. Last thing I should mention is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.